What's going on, guys? Welcome back to another video. Today, I think I have a pretty educational one for you. Over the last few weeks, we have seen a very defined channel on the market. We've been able to establish channel highs and channel lows. Now, when we can establish this type of trade, there is definitely a change in mentality, in psychology, in trading strategy, and how we trade when we're in this type of channel. And we don't have to adapt to it. We can leave it alone. We don't need to trade it, right? If we're someone that likes to look for continuation, looks for break and retest longs or shorts, we don't have to trade this type of channel. But I figured I would make a video today to talk about how I look to trade this type of channel. Trading a channel is definitely not my number one thing to go for. It's not my favorite type of trade, but I will trade it at times if I find a reason to. And I want to go ahead and break that down in today's video. What do I look for? How do I trade it? Within my strategy, right? How do I take my entries and exits, the technical side of the trade? And then also, which is I think the most important part of trading a channel, what is the psychology and the game plan behind this type of trade? We are not expecting to get that much out of a channel trade. We have to make sure we manage our expectations. So if we're able to identify the markets in a channel trade, how do we approach it? That's what today's video is going to be about. This may not be as relevant because today we may have broken out of that channel on the downside, but I still think that this video will serve a great purpose and will help you in the future when you can identify those channels on the market. So if you guys learned something from today's video, press that like button, subscribe to the channel. Let's go ahead and jump right into it. All right, guys, so here is the NASDAQ futures, and you can see today, which is funny enough, the day I plan to make this video, we actually do end up getting a break below the channel lows, which I think actually will play into this video great because I can talk a little bit about how to adapt to when a channel low is broken and the trade to look for, right? And we can see, and we'll see on the intraday, how clean the play under the channel low was today for a short side entry. But before today, let's ignore this move today. Before today, since about October 8th, so about, I don't know, 10 trading days, 12 trading days, just around there. 1, 2, 3, 4, 5, 6, 7, 8, about 9 to 10 trading days, we have seen the NASDAQ futures stay above 20,300 and stay below and fail to get above 20,600. So we have been able to identify pretty early on that this market has been unable to break below the lows, but also fail to get back above the highs. We saw that there were some previous lows here that failed. We rejected there, so 2 rejections right here. And we were able to see that really the lows were really the interesting trade, and that's where I've been making quite some money on, is longing those lows. And I want to talk about how I go about that trade. Now, today, which I think, again, fits into this video well, I did try to long those lows again. It didn't work today, and that is going to happen, right? And we'll get into that later in the video. If we're in a channel, if you keep trying to trade the channel, there's going to be a day, there will always be a day that that channel breaks, whether it's to the upside or the downside, right? If you kept trying to short, right, if you kept shorting 20,600, you made money, right? But eventually, you could have gotten that market to break out and hold above and continue higher, right? That is a possibility. That's always going to be a possibility. This is the same thing for that channel low. If you continued to long the channel low all of the last, say, 10 days, if you did it again today, well, unfortunately, it didn't hold for you. So that's a prerequisite that I want to go ahead and talk about, is that if you're going to trade a channel, like we see here on the NASDAQ, eventually it's going to break, right? The market's not going to trade sideways forever. Eventually, we're going to get a break and retest downside, break and retest upside. Those are the trades I like to take, right? The break and retest of the channel. Those are the juicy trades. But we can also tailor our trading to trade the channel, and so that's why I make today's video. I have a great example of a trade that I took yesterday on the SPX. I longed the channel low, and I sold into the channel high. It was a perfect channel trade, and I want to talk through that trade, talk through the mindset, the executions, and all of that to really showcase this type of channel trading. Now, before we get into that specific trade on the S&P 500, on the SPX, I want to go over a few things that are important to understand when we are going to trade a channel. The first thing is that we have to trust the channel levels. We have to play on the side of statistics. We have to trade on the side of what has happened in the past, and we want to look for it to happen again. If we take a look at this chart, these channel lows at 20,300 held 1, 2, 3, 4, 5, 6, 7 times, and broke one time, right? So the statistics would say if we're coming down into 20,300, 7 times in the past we have held it, 1 time we have broken it. So you want to look for that level to potentially long, right? And this is a good example. Of course, today it breaks down, and this is actually, I think, great for the video. You can see eventually, like I said, it will break down. But the side of statistics says trust the channel low and play that hold, play that demand bounce. That's what I've done for the last 2 weeks. I've made a lot of money doing it. Today, I lose money doing it. But risk management, hopefully your wins are larger than your losses. Of course, that's always going to be something to pay attention to. But if we're trading down into demand lows in a channel, the first rule for me is that I have to trust that trade. I have to take that trade. I am not going to look for the flush or the break below because I know that is a lower probability setup. It can happen, and it happened today, and you can see it in front of your face, but the higher probability is that the channel low will hold, right? And so if I have established that I want to trade the channel that I'm looking at, I need to play the longs off the lows. It goes for the same thing on the upside. If we are moving higher into a supply level, we cannot look to extend our wins past that supply. We have to start to risk off into that supply. Our game plan, if we do long the lows, right? If we do take a long off the 20,300 low here, our game plan is only to take it long into the known supply highs, whatever that level may be. 20,600 in this case is that known supply high. So if I'm going to set up that long, then I have to understand that I am only looking for, at the most, to trade this into channel highs. I have to respect the channel levels. It is very easy, and I know this from experience, to get into that long at 20,300 and think this is the one. This is the trade that breaks us out. This is the trade that brings us through the channel highs, and I'm going to keep holding for that breakout. This is a very common thing that goes on in your head, and this is typically what causes you to give back your profits, right? And so a great example is yesterday. The NASDAQ futures pushed higher into the 20,600 level. We closed the day at that 20,600 level, and we saw the next day, right, we dropped straight to the downside. So it looked like at the end of the day that the market was going to eventually squeeze through that 20,600 level, and this was going to be the time that the breakout comes in, and you can see once again the channel level holds, fails, and brings us down lower, right? So we have to be careful when we're trading in a channel. This is only for trading in a channel, right? I want to make sure you understand this is for trading in channels. So you have to know if you have an established channel, we have to trust the highs and we have to trust the lows. We have to make sure we're looking for those longs off the lows, profit taking into the highs, shorting the highs, profit taking back into the lows. The hardest part of this is the mentality, it's the psychology, it's the game plan and discipline to only look for that part of the trade. You are only looking for that channel trade. If you look for anything more, you expose yourself to the rejection, right? If you're long here and you you don't take profits into the highs, you expose yourself to that. If you short the low or the highs, right? If you shorted here and you said, okay, the market's going to tank, that's it, we're moving lower. Well, you held the lows again and you pushed back higher, right? So you can see from the probabilities and the statistics of this channel that we're looking at right here that it did not pay to look for the breakout or the breakdown. Now, of course, like I said previously, eventually that move will come where it breaks out of the channel, and that's the day that you have to be disciplined to cut your loss or to look for the break and retest continuation underneath that channel. Now, I want to quickly talk about the break and retest continuation under the channel because this was very clean today on the NASDAQ futures. So you guys can see right here, 20,300 was our established channel low, right? We held that thing for about 10 days. Every drop towards it, bounce, bounce, bounce every single time. Now, if we go into the short-term time frames today, right, let's go down into the 5-minute chart and let's take a look at what happened here today on the 20,300 level. So let's go ahead and zoom into the 2-minute chart, right? And so today, and I will show you guys this loss, I took a little baby long. It was a little QQQ long off of the 20,300 level. That was right here. I saw us starting to hold that 20,300. I said, here it is again. Here's the channel low. I'm going to try it. I'm going to look to see if I can get a long down at this 20,300, and I'm going to look to see if we get that upside continuation. Now, a little bit different in my situation here because I'm giving this trade a lot more space. It's longer dated, it's smaller size, but for this video's purpose, what I want to recommend to you is that if you were to take this trade on this long here at 20,300 and you really put some size and you were very confident and you just wanted to see that trade work out, then you absolutely needed to start stopping out of this trade as that level started to reject, right? You can see that 20,300 channel low created that upside temporarily. It did not hold true. It failed, right? And you can see that it caused the downside rejection under 20,300. And that right there, my friends, is a beautiful break and retest rejection under the channel low. And you can see how that caused some great downside continuation intraday today. So right there is a great example of that channel low breaking on the short term and how you need to react to that and how important it was to react to that today on the short side or to stop out of your longs at 20,300. So right there is an awesome example of the channel low not holding, right? And like I said, if you're going to expose yourself to trading a channel, an established channel in the market, there is going to be the time that you try it and it fails. But I hope, and it should, right, in terms of the probabilities, if it's an established channel, there should be multiple times that you've taken that trade that it did work to where that one time it fails, it does not offset all of your wins, right? The last 7 times that the NASDAQ futures bounced off 20,300 should have resulted in more profits than the time that you get stuck in the loss, right? And that's probabilities. That's trading a risk-reward strategy, right? So there is great risk-reward when it comes to trading channels because you know exactly where you're entering, you know exactly where you're exiting. You're entering at the channel low, you're stopping out if it breaks below it. If it works like it's done previously, great risk-reward. That one time that it doesn't, you can see right here. Today is a great example of that. It failed today. I took a loss on this trade, and unfortunately, it didn't work for me today, right? So, but I can tell you, the rest of the month, right, we've been taking those longs, and that has been a very paying thing to be looking for. Longs here, right? Longs, taking longs on pullbacks into these levels have been fantastic. Today, no bueno, right? We fail it. So, great example there of trading that channel, trusting that low, playing it, thinking through the probabilities and the statistics of that channel, playing it with proper risk reward, and looking for that reversal trade off channel low or channel high. Now, what I want to get into next is the intra-trade management of that type of channel trade, right? And so if we go ahead and go back to yesterday let's go to yesterday on the NASDAQ futures, right? Actually, yeah, we'll go to yesterday on the NASDAQ futures, and we'll talk through this 20,350 level that I was longing off of yesterday. So we had this 20,350 low that came in both on Friday, came in Monday, and came in yesterday. We can see right here, this little 20,350 level, that is right here. So we can see that Friday low, we can see that Monday low, and we can see yesterday, Tuesday low, right? And so that is an established channel and a channel low that I was watching. Now, yesterday, I went ahead and I longed the SPX, looking for the market to maintain, number one, the 20,350 low, but also if we go to the ES, I was looking for the ES to maintain right here, which was that 58.65 low. So we'll actually just go ahead and use the ES for this example. Let's go ahead and zoom into the ES, and then I will pull up my TradeZella and talk through the exact specifics of the trade that I took. So let's say we come into the day, this was yesterday, and we know, hey, the S&P 500 has been holding this 58.65 channel low, and I'm going to go ahead and look for it to hold again, right? And so yesterday, about 30 minutes into open, we saw that S&P 500 holding that low, and I went ahead and I set up my trade, right? I'm setting up my long trade. I'm trusting that we're going to hold above the low of day, hold above that channel low, and I'm looking for, right? And I'm just looking for the move into channel highs at the most. That is all I'm looking for is the channel high push. Now, if you're going to trade short-term options on this type of trade, you need to take advantage of every push to the upside. Every pop off that channel low that you get, You have to be taking profits into that move. Why? Why do I say that? And why do you need to be so precise in trading a channel? Because inside of that channel is a very unknown area. It's a very unknown sort of dark hole type of area. You know you have your channel lows, and you know you have your supply highs. But in between those two guardrails, there's going to be a lot of games that go on, right? Some big pushes, some big drops, back up, back down, right? That sort of chop that you guys know and love, probably don't love. So when you get that option expansion on a nice push off that demand low, you better be profit taking, because you don't know what the next 5, 10, 15 minutes look like. For example, I will show you this right here when you zoom in on yesterday's price action. Right here, I vividly remember we longed here off 58.65. We got this pop, and I was profit taking into this push. 5 minutes later, we dropped straight back down, and my contracts went back to break even from being up around 20%. Now, I took profits there, so I'm chilling, right? My game plan is as long as we're over 58.65. So we can see we move lower. I keep holding. I've taken profits. I'm sort of stabbing out those longs as we get the pushes, reducing my risk by scaling out. So we scale out here. We drop lower, pop again. All right, more off, more profits, right? Every time I take my profits into this push, I'm reducing my risk. If we pull back, so be it, right? I have less risk. I've been taking profits on the pushes. You can see little pullback again. Market remains balanced, remains sideways, nothing going on. You're still holding some runners, and you've done a great job of scaling off some profits. Next, big push, and this is getting close to channel high, which is right here around 59.15, and this is where I took my position off. So, to recap sort of what I just talked about there, if we're going to long a channel low, we are long the channel low, and that's it. We are not long off channel lows if we go up, right, and then come back lower just a little bit. We're not panicking out of the trade, okay? If you're going to commit to longing a channel low, you have to commit to longing that channel low. You cannot long a channel low, get a pop, get a pullback, and then panic out of our position when we're still above the channel low. That is not something that you should be getting involved with. If you can't control yourself to trust a channel low, you should not be trading it. If you're going to long this low, you better stay long that low, and you better look for that full target. Because if you don't, then your risk reward is all out of whack, right? There's no sense in longing a channel low if you're not going to try to target the channel high, because then your risk reward makes no sense. If you're going to long that low, you need to have positive risk reward, which means you need to hold the trade for the move. All right, so don't take a channel low trade and then panic out because it pulls back a little bit. You have to commit to that low, and you have to stay long. That's the same reason. That's the same thing for the upside or for the downside trade. If you're going to short a channel high, just because we pop back into it doesn't mean you're just panicking out. You got to commit to that. You got to look for that continuation to the downside. I'll go ahead and show you an example of that, right? Great example of that on the NASDAQ yesterday. It's really in the after-hour session, so hard to say. But you can see right here, right? Look at this. Channel high. If you shorted there, you got to drop, but you got to push back higher. You're not cutting that trade right there. You cannot cut that trade right there. Just because we move back higher does not mean that you now need to panic out of your short at channel high. So if you're going to short that channel high, you better commit to it. Even if that pop comes in, that's fine. It's a lower high. As long as you're below that channel high supply, you're good. You're relaxed, right? You need to have that kind of mentality and the ability to control and understand your game plan, right? Very relaxed. I'm short channel high. As long as we're under it, I'm going to look for the drops to take profits, but I'm going to continue to hold some of my position. If I'm long channel low, I'm going to long that low, calm, cool, and collected as long as we're above that low, and look to take profits into the pops, right? A very, very important part if you're going to trade these channels. You have to have the right mindset. I cannot be entering a trade off the lows, panicking on a pullback when it's still above that low. This is going to mess you up. You're going to get not good risk reward on your trades. Some of them are going to work. Some of them are going to fail. And you're just going to be all over the place, right? So commit to it. Trade it with comfortable size. trade it with comfortable contracts, and let it be and let it play out, right? Know your target, know your risk, and let it play out. This again, and I want to remember, if you're watching this, I want to remind you, this again is for channel trading only, okay? This is very different when I'm scalping, breaking retests, or looking for continuation trades. This is for channel trading. This is at least how I think about it and how I trade it. So with that said, what I want to do now is I want to go ahead and pull up my SPX trade from yesterday, and we will show you the exact entries and exits, and I'll walk you through my mindset during that trade. All right, guys, so here is the SPX trade, and this is a 40% trade. It's a $31,000 profit with 40% as the full net profit. Now, if I go to the executions, my first entries were around 16. My last exit was around 30. So a little bit more than 40%. I think it was around the 80% on the last profit, right, on the last runners, which was down to very small size. But net, it was about a 40% trade with runners going around 80%. And if we zoom into the chart here, guys, you can see that I am not BSing you. This is exactly how I trade channels, and I'm telling you that it works for me a larger percent of the time than it doesn't, right? It doesn't always work, okay? Nothing in trading always works, right? So if you're watching this video and you think I'm going to teach you how to make millions of dollars, possibly, right? Possibly. But there's times where the strategies don't work, and you have to make sure the risk management is intact. That is the most important thing. So you can see my entries. I'm going to go ahead and circle my entries. That's my entry. Exits, right? That's one entry, and that's about 1, 2, 3, 4, 3, 6. That's 7 exits. One entry, 7 exits. I entered near the bottom. I entered early morning near the channel low, right? You can see right here. I entered pretty early morning around 9:33, so about 3 minutes in the open. I started to see that those buyers were stepping in at that channel low, and I wanted to trust it, right? Because at that channel low, whether I have full confirmation or not, and this goes back to what I talked about trusting the level. I don't fully look for like the most confirmation possible because I can't. There's no way to be fully confirmed in something in a trade. You have to take a risk, a calculated risk. That's what trading's all about. So I saw that the level was holding for about 3-4 minutes. I started to see those wicks coming in off that level, and I knew that if I enter now, I have the highest risk reward for a channel trade because I know exactly where my stop loss is. It's very close, and I can stop out right under the channel low. If we break it, I'm out. I take my loss. But if we hold it and I enter here and we maintain channel low, which I have belief in and I have trust in because it's held previously, then I have great risk reward. And so what happened was the channel held. Now you can see every pop that we got, I was selling into. I sold into this first pop. We pulled back. I held. I maintained. Next pop, sold into it, right? So I was selling into those pops. Now, market remained sideways. Nothing really going on. What happened? Another pop to the upside, taking more profits. Popping higher, taking more profits. Popping higher, taking more profits as we approach the channel high. Now, I personally like to start to exit as we get close. I'm not going to wait for it to go fully to it. I'm going to start exiting as we approach just in case those sellers start stepping in at that channel high and the rejections start to show. So you can see this is a great example here on the SPX of what I did yesterday off the ES channel lows and selling into that push. If we go to the ES, I'll go ahead and walk through that trade a little bit and talk to you about what I was looking for once again. So right here, you guys can see, I'll go ahead and zoom out. On the 30-minute chart, I believe there was a very established low around the 58.65 level. We had these previous highs. We had these previous highs here. We had these lows here from Wednesday. We had these lows from Monday. And again on Tuesday yesterday, I was looking for it to hold. And that is exactly what it did. So I was entering long early morning as we were maintaining that low. I'll go ahead and zoom into the intraday price action. Here's market open right here, right? And this is market open. We can see, look at these wicks on the 5-minute chart pushing us higher off that 58.65. Buyers were stepping in, and we can see those candles pushing higher, and I started to get my longs about 3 minutes into open, and every pop we got, I was selling into the push, right? So that was my trade on the ES. That's how I was able to trade that channel, and I was scaling out as we were approaching the known supply area, and not only on that, right, because I watch everything, I'm also watching the NASDAQ futures, and I know that the NASDAQ futures were also moving higher into the known supply area at 20,600, right? So I knew SPX trades coming to a close. We're getting near that supply. I'm not looking for the breakout. I am not interested in a breakout here. I'm just trading from channel low to channel high, and that's about it, right? And so that is how I traded that, and I hope that this gives you some insight into the mindset of the channel trade, how I do it, how I execute it, the psychology behind it. Hopefully this gives you some tips. We're not always going to be in a channel in the market, but when you find yourself in one, I recommend you trade this way and with this mindset. So that's just about it for today's video, guys. I hope you did enjoy it. Some good information, I believe, about how I trade that channel. Of course, this is not a all-in-one type of video. I hope this just gives you some insight, gives you some idea of what I look for. If it did help you today, press that like button for me, subscribe to the channel. If you want to trade live with me every day, link down below in the description. And I hope you guys have a fantastic rest of your night. Peace out.